In business today, three things to know. First, Janet Yellen over easy. Yellen testifies in front of Congress. She does not break any eggs. What she said about Fed policy and the market's reaction. Then, South Africa, one of the so-called fragile five, what Africa's largest economy needs to do to pull itself together. And forget the Hollywood Hills. How about the Virginia Hills? How the state is making a play for the movie industry with blockbuster tax breaks. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. Janet Yellen spoke, and boy, the markets very much liked what she had to say, which was basically more of the same. Yellen spoke in front of the U.S. House Financial Services Committee Tuesday to reiterate Fed policy of providing monetary stimulus to boost the economy. In other words, from Wall Street's perspective, she did no harm in her testimony, stressing continuity in Fed policy. Yellen told the committee that she expects to stay the course.
If incoming information broadly supports the committee's expectation of ongoing improvement in labor market conditions and inflation moving back toward its longer-run objective, the committee will likely reduce the pace of asset purchases in further measured steps at future meetings.
A lot of words, but basically, same as usual. She also addressed the sell-off in some of the global markets.
We have been watching closely the recent volatility in global financial markets. Our sense is that at this stage, these developments do not pose a substantial risk to the U.S. economic outlook. We will, of course, continue to monitor the situation.
We'll talk more about Yellen's address in a moment. But first, the markets rallied on her testimony, as well as news that Republicans will not likely block the raising of the nation's debt ceiling. Here are the closing numbers. The Dow Jones Industrial Average up nearly 200 points to 15,994. The S&P 500 up better than 1% to 1819. And the NASDAQ also up 1% to 4191. Taking a look at some of the stocks we're watching today. More troubling news for struggling smartphone maker BlackBerry. Vice President Andrew Bachin, who is in charge of the company's instant messaging platform known as BBM, has made the decision to quit, according to BlackBerry. BlackBerry closing down to $9.80. The third largest U.S. cellular carrier, Sprint, reporting $9.1 billion in fourth quarter revenue. That's about 1.5% year-over-year increase, beating analyst expectations of $9 billion. Sprint closing up 21 cents to $7.90. Barnes & Noble cut staff from its Nook division to cut costs. Barnes & Noble says it remains, however, optimistic about the Nook's growth despite those layoffs. The company reporting $125 million in Nook sales during the holiday season. That's a 60% drop from last year. Barnes & Noble down 21 cents to $15.85. Taking a look at commodities. Gold up $15.90, a little bit of a rally for gold. Oil below the $100 mark to $99.88. As we reported, the new Federal Reserve Chair Janet Yellen testified before the House Financial Services Committee today. It was her first appearance since taking the helm of the central bank earlier this month. Her remarks on the Fed basically stay the course. With more on what that means is Gus Fauché with PNC Financial Services. Gus is senior economist at PNC. Gus, thank you for joining us today.
Thank you.
All right, so how did she do on her first day in front of Congress?
She did fine. She didn't make any waves. She said what everyone expected her to say, and she said that she would continue with the policies that were set under the previous Fed chairman, Ben Bernanke. So markets liked what they heard. It looks like the Fed will continue to reduce their purchases of long-term assets gradually over the course of this year, and that's what markets were expecting.
What did the markets like most about this, that there would be continued tapering of the stimulus plan, or that she sounded rather dovish that if need be, the stimulus will continue?
I think it's a combination of both. I think one thing that the markets liked is the fact that she said that the recent weak employment reports that we got in December and January, those are an anomaly, that those don't reflect what's going on in the economy. And so she's still relatively optimistic about growth in the near term, and that will allow her to gradually reduce those asset purchases. Then what she did say, however, is that if weakness does show up, that the asset purchases aren't at a preset pace, and that the Fed could change its its moves over the next few months or so, but she doesn't expect that to happen.
Does she still expect or target a 6.5% unemployment rate, and that number now meaning maybe a little bit less because people have dropped out of the jobs market? Is she still and the Fed still looking for that number?
I mean, the Fed has said in its last few statements that they will start to consider raising the Fed funds rate. That's the key short-term rate once the unemployment rate hits 6.5%. But she's made it clear that it's already at 6.7%. It would presumably be at around 6.5% sometime in the middle of this year. That the Fed will be wait until well past that to increase short-term rates. The Fed's own projections make it clear that they don't expect short-term rates to move up until the end of 2015. I think Chair Yellen emphasized that today. And so I don't think short-term rates are going anywhere anytime soon.
And you believe that the last couple of weak jobs reports, sort of an anomaly here, doesn't reflect what's going on in the economy. Why do you have that position?
Well, I mean, first of all, GDP growth in the second half of 2013 was about 3.6% at an annual rate. That's quite a strong number, and that's incompatible with the weak job growth that we've had over the past couple of months. Other indicators, initial unemployment insurance claims, consumer spending, they all seem to indicate that the economy is growing nicely at the end of 2013, beginning of 2014. And then, obviously, we've had some very cold weather in the United States that's likely affected some of the numbers. So I think you put all that together, those weak December and January numbers don't really reflect what's going on in the economy. I think underlying job growth is somewhere between 175,000 and 200,000 per month, and I would expect that we would return to that pace pretty quickly.
And part of the reason we may start to see some jobs growth is we're starting to see a little bit of a pop in optimism among small businesses. What do you think is driving that optimism right now? Because that number is a little bit of a reversal.
That's right. I mean, we did have a survey from the National Federation of Independent Businesses. It's a small business organization that indicated that those small businesses do plan to increase their hiring in the near term. Generally, there's these businesses, and whether it's small businesses or large businesses, they're seeing stronger demand. U.S. consumers are buying a little bit more. Businesses are buying a little bit more. Exports are increasing with stronger growth overseas and the end of the recession in Europe. So basically, we're seeing stronger demand here in the United States, and businesses are going to need to hire if they want to keep up with that stronger demand. So I think it's just a reflection of reality that, we are 5-6 years into the recovery. It's been slow, but we are getting there, and that we are seeing demand gradually strengthening, and that businesses will need to hire to keep up with that.
Gus Fauché, senior economist with PNC Financial Services, on the phone from Pittsburgh. Thank you so much.
Thank you.
South Africa has been labeled one of the, quote, fragile five. Not a label the struggling nation really wants. Africa Investments Advisors Ashley Bendel is back here on Arise Exchange to talk to us a little bit about what that means. Ashley, welcome back to Arise Exchange.
Thanks, Andrew.
Let me ask you about the recent sell-off we've had in the emerging markets for both the equities and the currency concerns. How is that playing a role in South Africa's economy right now, specifically investment dollars going into it?
Sure. Well, when you look at the U.S. investors specifically here, I think that from speaking with them myself, you see both sides. You see people that are still overweight, you see people that are underweight. But I think broadly in line. I think they were surprised by the rate hike, as most were, a couple of weeks ago now, by 50 basis points. The hope was that would keep the rand relatively steady. I think the proof will be in the pudding. Do
you think that they need to improve the value of the rand? They need to inflate the value, you're concerned?
Well, I think there's pros and cons, right? A stronger rand is great for importers at the moment. They're struggling with inflation. And on the whole, that will certainly be positive for those manufacturing at home. With that said, some of the companies that do export MTN cell phones to Nigeria, Naspers, which is Tencent in China, have done extraordinarily well and had a great run off the back of the weaker rand.
What do you think of this definition or this term, fragile five? Does South Africa fit in there?
I think it does. It's a very liquid emerging market. It's obviously part of the BRICS with that additional S now. And yes, it does and it does maintain significant investment dollars, and I think we'll continue to do so.
And what you mean by liquidity means that the money can flow in and out pretty easily.
Absolutely, both within the equity and debt market.
Okay, so we were in Davos at the World Economic Forum. Africa, the big topic there. Did you hear anything as it applies to South Africa come out of the World Economic Forum?
Specifically, not that much. I think the big focus at the Economic Forum was across Africa as a whole. There was a fantastic panel led by Aliko Dangote, the Nigerian industrialist, with the presidents of Nigeria and of Ghana. And they're really talking about the progress that they need to make at the top level with regard to developments. I know that South Africa was there, but not something I followed too closely.
As we talk about South Africa, and you've been on a few times, are you seeing progress in the country, especially on the labor issues? They have this ongoing issue with the miners and the mining strike and the mining companies. And in South Africans say they need to move away from a commodities-based economy. Are you starting to see more encouraging signs from that?
I think I totally agree. It is something we need to move away from. In South Africa, you do have these negotiations every year, and they certainly dragged on over the last couple, which has in itself fed into the weak rand. With an election coming up in May, I think it's something which they will certainly discuss. There will be a lot of noise around it. I think they will have to put that into action after the election, so perhaps towards the end of 2014.
Yeah, there is pressure on the government there. What is your sense from the voters in South Africa of the impact of this, as far as the voters starting to put pressure on the government regarding the striking situation?
Yeah, well, we've seen that for some time now. The man on the street has been suffering. They haven't really seen any benefits from this burgeoning commodity sector. And that absolutely has to happen. The worry now is with increased interest rates that their back pocket is going to be hit, and there could be even more trouble and more to fight against.
So has anything changed in your investment advice to your clients right now in South Africa?
I think well, it's very tough to call the rand. You've seen a number of investment banks downgrade their views, perhaps toward the mid-tens, converting that into dollars. I think you have to look at sectors that will benefit from a higher interest rate, and the banks, perhaps.
What about the competition between South Africa and Nigeria for investment dollars? And I don't know if some dollars go to South Africa and don't go to Nigeria, or vice versa, or if there's enough to go around. But Nigeria is really becoming an economic force.
Absolutely. I think you can't really compare apples to apples here. I think they're at different stages in raising that investment capital. Nigeria is certainly gaining a lot of investment, but it isn't on the scale of South Africa. We're still seeing a lot of money going into South Africa and then dispersing into the rest of sub-Saharan Africa, like Nigeria.
Okay, Ashley Bendel, come back soon. Thank you.
It's a pleasure. Thank you.
Coming up, pulling South Africa's economy out of a rut. Actually, we just talked to Ashley about that. We'll be back here on Arise Exchange in a moment. Thank you. Because we live in a global, interconnected world, business news no longer stops when the markets close on Wall Street. And what we've discovered over the past few years in the financial crisis is that events and news that happen even in the smallest countries impact the United States and the world at large. As we bring together experts and analysts and thought leaders and CEOs and companies across many industries to not only provide the macroeconomic view, but news everyday people can use. Now for a business ticker, it looks like House Republicans will vote on the debt limit with no strings attached. Earlier this week, Speaker John Boehner laid out a plan to link the debt ceiling increase to legislation that would have reversed a cut to veteran retirement benefits. But conservative Republicans opposed that move, and there was concern Democrats would hold firm to the president's demand that no policy attachments come with a raise in the debt ceiling. So Boehner explained the decision to go forward with what is called a clean debt ceiling bill as a reflection of political reality that he simply does not have enough Republican votes to pass anything more ambitious. It was somewhat of a trifecta for Barclays today. The British bank reported dismal earnings, which sent share prices sliding, on top of which it cut 9% of its workforce in the UK, or 12,000 jobs. But despite the profit slump and job cuts, the bank also announced it would hike investment banking bonuses by 13%. In a joint operation, U.S. and Italian authorities have made arrests in alleged drug trafficking links between mafia families in New York and Italy. According to police, the two-year investigation has led to the arrest of 26 people in both countries. They include 8 alleged members of the Gambino family in New York and others from the Ndrangheta family in southern Italy. The charges range from mafia association to international drug trafficking and money laundering. And looking in now at the Winter Games in Sochi. Barely 48 hours after U.S. bobsledder Johnny Quinn was trapped in his bathroom at the Olympic Athletes Village, he was stuck again. this time in an elevator with two teammates. Quinn made international headlines over the weekend when he was forced to smash through a jammed bathroom door after taking a shower. It's unclear how long the athletes were trapped in the elevator or how they were able to escape. But in a separate incident, British bobsledder Bex Wilson nearly walked into an open elevator shaft after leaving her room. Wonder what's going on with the bobsledding teams there. Slight gains in the job market are providing a glimmer of hope in the housing market, but experts say it is still a long way from full recovery. Part of the problem is that home values are rising faster than incomes. Prices for single-family homes rose by more than 70% in the fourth quarter. Global housing expert Baron Channer joins us from Miami on the phone with more of what we can expect for housing this year. Baron, thank you for spending a few minutes with us today.
Thank you for having me, Andrew.
So let me ask you this: we should be celebrating the increase in housing prices, should we not? But once again, we're finding ourselves in a situation where prices seem to be getting ahead of people's income.
Absolutely, you hit a nail on the head. We should be celebrating, but the real story of the economy always and forever will be employment. If you look at these numbers, what these numbers indicate is that we're still going through the process of recovery. Some concerns that the pace of price increases have slowed relative to the prior quarter. However, I look at that and think that that's really just a small blip on the radar. And the real story here is the fact that the economy continues to move slowly. What we'll ultimately end up seeing is that, unless the unemployment issue can be addressed, the housing issue ends up being marginally relevant.
That's correct. And we kind of want to see a little bit more of a balance. And where is that balance? We can't continue to have the pace of housing growth that we've had, 70% in some markets, 10% nationally. Some would call that a pretty healthy response. So you have to have that balance. And where would you see the growth of housing prices compared to employment? What makes you feel comfortable?
Well, right now, there's some uncertainties out there that are variables that still need to be dealt with. We're seeing a housing market that is somewhat sitting on rails.
Yep.
You have very controlled new construction starts. So the housing builders aren't pumping a substantial amount of inventory or their traditional levels of inventory into the market. So that leads to less supply. You have very constrained availability of capital, and so the average individual is not in the position to spend the way that they have been able to spend in the past. And so this number, while being certainly positive, certainly something that should be appreciated, still it should not leave us being too overconfident.
Baron, how artificial is this market, though? Because on one hand, you have foreclosures often stopped by various laws and people being helped out. And that has inflated prices, haven't they? I mean, people who want to buy homes haven't been able to access those homes.
To a certain extent, that is true. But you still have foreclosures are representing somewhere in the neighborhood of 8 to 10% of the overall sales that are transacted. So they're still having an influence on the market. But you hit the nail on the head, and the question comes, lenders have significant inventories of properties they foreclosed on. Hedge funds and private equity funds that themselves have previously acquired homes are sitting on those homes, and at some point they're going to look to yield a profit, and so those homes will come to the market. And the question will be, will they look for market rate prices, or will they be willing to discount the prices and thereby negatively impact the overall median home price?
And finally, we really don't know the Fed effect here by pumping all that money into the economy and keeping interest rates really low. We're starting to see mortgage rates increase. We still have what some have called an artificial housing market.
We do still have what some have called that, and I think we have an overall economy that is limping and being kept alive and being moved along with all sorts of medication, which the reality is it's necessary medicine, because the real life indicator here ends up being unemployment. And until that number, combined with long-term inflation, gets to the right level, we're going to see the policymakers move to prop up the economy, and housing just happens to be the largest indicator to pay attention to.
Baron Channer, thank you so much for your time today.
Thank you, Andrew. Samuel
L. Jackson's tirade against the anchor who made a stupid mistake, and why that anchor is our favorite person of the day. You're watching Arise Exchange.
The great thing about Arise Entertainment 360 is that we cover the 360 of entertainment, food, fashion, lifestyle, culture. We're able to cover it all. And the thing I love most about the show is we're able to do a stunning combination of high and low. So we can talk about Rihanna on the red carpet, but we can also speak about high art with people like Sanford Biggers and Hank Willis. We actually spend quality time with our guests and we really get to know them. It's really intriguing because we get a 360 look at our guests.
Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. Today, that person is a terribly embarrassed Los Angeles TV anchor who mistook Samuel L. Jackson for Lawrence Fishburne during an interview, and Jackson would not let him off the hook. It began innocently enough during an interview for Jackson's new movie RoboCop, but the anchor, Sam Rubin from KTLA-TV, asked Jackson about the Super Bowl commercial he was in. Except he wasn't in a Super Bowl commercial. Fishburne was in the aforementioned Super Bowl commercial. That led Jackson to say, quote, "We don't all look alike. Here is a clip." It's a little painful to watch.
Tell you what, you working for Marvel, the Super Bowl commercial, did you get a lot of reaction to that Super Bowl commercial?
What Super Bowl commercial?
Right.
I'm not Lawrence Fishburne. I'm the other guy, the other one. What's in your wallet?
Rubin repeatedly, he was referring to his commercial, Rubin repeatedly apologized and tried to joke about it, but Jackson wouldn't let up. At some point, we wonder if Jackson piled on a little too much. Kind of feel bad a little bit for the anchor, don't you? I mean, you know, us anchors have to kind of stick together. As an anchor who sometimes gets things wrong myself, we feel for him. Still, for shoddy research and for an interview he will never live down, Sam Rubin is our favorite person of the day. Coming up, Virginia makes a play to be the new Hollywood, how tax breaks could attract blockbusters. You're watching Arise Exchange.
One of the great things about Arise Entertainment 360 is we have this Arise to Your Health segment, which really focuses on the holistic approach of being healthy. So we do everything from working out to juicing to getting in shape by doing fun exercises like bouncing on a trampoline or wearing these bouncy boots on our feet when we're jumping all over the set. We've done karate, we've danced the weight off, we've done just about everything. And of course, I love when we eat on set, but we do it in a very healthy and clean way.
Arise serves underserved communities by bringing them news, information, sports, and entertainment from places that are becoming part of the world economy, that are becoming a part of the world voice, and decisions that are affecting things in the world that people care about. They care about the economy. They care about safety and security. And if you come to Arise and you watch our broadcast, these are the things we're going to bring to you every day, 24 hours a day.
Hollywood gets a big break in Virginia. This after lawmakers in Virginia voted to boost film credits by 400%. The state's House of Delegates voted to increase the state's cap on refundable corporate income tax credits to the film industry from $5 million every 2 years to $25 million. Andy Edmonds is the director of the Virginia Film Office. He is on the phone with us now. Andrew, good afternoon to you.
Good afternoon. Thanks for having me.
So what is driving a 400% increase in what is a relatively large tax break? How do you see this playing out?
Well, it's interesting. You know, the demand for content worldwide has just grown explosively over the last few years. As you can imagine, the number of channels you have on your cable system or your satellite system just creates this huge demand for content. And the creation of this content is, in fact, a manufacturing process. So these are basically the manufacturing jobs of the future. Highly skilled jobs, jobs that pay about 25% higher than your average wage, jobs that are created and sought after by many students that come through the university and college system in Virginia. There are 33 colleges that have media and film production programs within their curriculum. These kids come out of school, they want to be able to get a job working in the industry, and we want them to be able to stay in Virginia to do so. When a production company comes into Virginia, they affect all parts of the economy. It's everything from buying paper clips to renting helicopters, and this is why these highly paid, highly skilled jobs are sought after by 42 states in the United States that all provide these tax credits.
Sure. And Andrew, certainly tax breaks certainly attract businesses. We could see that time and time again. But you know what the critics are saying? Those, including the Cato Institute, says these are tax breaks for very, very wealthy. These are billion-dollar industries that do very well, and that the state is picking winners and losers here. And, of course, that somebody has to pay for these tax credits because Virginia spends a lot of money on various programs. So I'm going to ask you to address them basically all at once. Do you think that it's fair that the state is picking an industry to give tax credits to, especially one with billions of dollars behind it?
Well, it's interesting. I guess you do have to make a choice as to what industry you want to pursue, and does this industry, which is a very clean industry, does it provide more bang for your buck? And when you invest in certain industries, you want to invest in one that has the largest ROI possible, return on investment, right? So they actually did a study, and I know it depends on what studies you read. Maybe Cato has different studies, but we just recently did a study here by Mangum Consulting that determined that every dollar we put out an incentive returns $11.80 to Virginia's economy. So we feel that's a good investment for the citizens of the Commonwealth. And 42 other states provide very similar tax credits to this industry. And, in fact, it's really not money for a multi-billion-dollar industry. It's not money for Hollywood. This is money, I like to say, for Holly Smith. This is a Virginia resident that works on the crew in a highly skilled job.
Sure. Andy, let me ask you that. Do you have data that shows that these jobs actually stay in Virginia? It's not like opening a factory where people work there and stay there. This is the film industry, which is a very transient business. Meaning, what I'm asking you is, is Virginia giving jobs to people coming from out of state temporarily to work there?
It's interesting. It is a hybrid of some people that come from out of state, so they're like super tourists with the payroll. When the crew does come from out of state, they stay in hotels, and they also touch these other parts of the economy and buying all the materials they use to make the film. But that's just part of the story. Currently, we have a series, for example, with AMC Television, AMC Networks. They're producing a show in Virginia right now, and about 80% of the crew members are Virginia residents. And they are temporary jobs. They might work for 6 or 7 months on this particular series, but then when that goes away, they work on another show that comes in. So you want multiple shows coming in on a regular basis, so you create full-time employment, but over multiple different opportunities throughout the year. It is not like a factory that's being built that someone is locked in a factory on an assembly line in a job. It's a job that is transient around the state, and it does employ some people that come into the state, but also much of a resident industry that's already here.
I guess, Andy, there's also a tourism component to it, meaning people will see, if for movies and films that are shot outside, see Virginia and maybe come as well. Do you see any of that effect?
Well, it's interesting. We filmed Steven Spielberg's Lincoln. We filmed in Virginia, and it had a huge impact on tourism. In one place in Petersburg, for example, there were 3 different tourist attractions that saw their attendance increase by 125% just by virtue of the film having been made there. We have other examples. The movie Dirty Dancing, for example, was filmed in Virginia. 25 years later, people still come to visit the resort where that movie was made. So there's definitely an ancillary value.
Andy, we're out of time. Andy Edmonds, the director of the Virginia Film Office, thank you.
Thanks for the opportunity. Bye-bye.
Speaking of films, Shirley Temple, the dimpled, curly-haired child star who almost single-handedly saved 20th Century Fox, died Tuesday at the age of 85.
Look at the funny side.
Shirley Temple Black was America's top box office draw from 1935 to 1938, a record no child star has ever matched. With a repertoire of singing, dancing, and sobbing her way through movies, she proved to be a bigger hit than even adult stars such as Clark Gable, Bing Crosby, and Gary Cooper. More than 70 years after she stepped out of the limelight, the American Film Institute ranked her in the top 50 screen legends of all time. In 2006, she was awarded a Lifetime Achievement Award by the Screen Actors Guild.
I have one piece of advice for those of you who want to receive the Lifetime Achievement Award. Start early.
Later in life, Black was active in Republican politics and served as ambassador to Ghana and Czechoslovakia at the time of the collapse of the communist government.
From her childhood to the present day, Shirley has always been an ambassador for what was best about America. Ladies and gentlemen, Ms. Shirley Temple Black.
on the good ship.
Temple was one of the first actresses to be part of a merchandising empire. Her image appeared on dolls, china, and clothes, and The Good Ship Lollipop was one of the best-selling singles of all time. I'm Andrew Schmertz. Thanks for watching Arise Exchange.